Welcome to the Daily Stock Review. Today we're going over Union Pacific Corporation. Goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor on the journey, 2,500 hours in over the last 7 years. I'm sharing the lessons along the way. Today we're just going to jump straight into the stock analysis. This is the process that I use. It's 5 steps. We're going to go over where I look for this stock and how I came across it, and then we're going to do this 5-minute check to see if it's worth looking into further. Learn from these guys. They did pretty well for themselves, and I want to follow in their footsteps from the little breadcrumbs that they've left behind. So let's jump into it. So Union Pacific Corp. I want to have a look for the annual report. So I already cracked that open, and I want to look for the financial statements. So while I'm looking for that, how I came across this business, there are a lot of great businesses that fall under the category of businesses that effectively work like a toll booth. And so they have a very strong moat around it. That just means a very strong competitive advantage. And so Warren Buffett, etc., all those guys at times have found some great investments in businesses that work like this. So railway companies are a great example of this. So let's have a look and see if this business is worth our time. I'm looking for 3 things. Mastery. Has business mastered its customer? So I want to see that revenues are growing and that they've got some healthy margins. I want to also see if the moat of the business can be seen in the financials. So that should be seeing that the margins go throughout the business and right down to the bottom line, and that it generates cash. And the other one is management. So I want to see that has this business got some reasonable management and they're being rational with how they're spending the company's money. So let's have a go. Operating revenues, we've got freight revenues, and then others being a lot smaller. But we can see that the income from these guys is extremely slow and steady. So it's still growing, but very slowly. Now, operating expenses, we've got compensation and benefits, things like that. That'll come out. Let's have a look at total operating expenses and then operating income. So we can see that our operating income has increased, slow and steady again. And what kind of margins are we looking at? We've got almost 10 to 24. Is this in millions? Yep. So 10. They get close to 10 billion off revenues of 24. So we're still looking around a 25 to 30%. Oh, sorry, a little bit more. 30%. And then we come down. We want to see what the net income is. So we've got 6.3, 6.77. So slow and steady again, increasing. I mean, there's not a lot of change in these businesses. Effectively, they just keep doing what they're doing. The future ability to, until we get portal travel, there's usually going to be, we do need to get things from A to B around the world. And freight is one of the cheapest and most efficient methods for that. Especially, obviously, on land. You can't drive or float a large ship through and over the land just yet. All right, so this business does have some pretty consistent margins coming out of the business and net income at the end of the day. And that's pretty good. So 7 to 24. Now we want to have a look at the balance sheet. So it's also called the statement of financial position here. And we want to just see if the business is not too loaded up with debt. How's it going in terms of its assets? So it's got properties, slowly growing them, 58 to 59. And the overall total assets is 69 billion. What about the debt and liabilities? So debt due after 1 year, just means non-current. Sweet. So that's $30 billion worth of debt, deferred income taxes, etc. So it's sitting at 51. Debt isn't increasing. And treasury stock. Retained earnings is growing. All right, let's have a look at the cash flow statement. So there's nothing too crazy going on back there in that balance sheet. So we get our net income, the bottom line from the income statement, comes out onto the top line of the cash flow statement, comes out and we get this number, which is cash provided by operating activities. So after these little adjustments come out, we've got a steadily increasing, pretty much, bar a couple of little numbers that have evened out here, but we'll end up with about a little over $9 billion. Now we've got investing activities come out, so we've got capital investments, so 3.6, 3.4, 3.7. So that could be purchases of additional land. It could be the actual cars or actual trains and cars, either if they're being leased or not, to be able to transport the things they need to from A to B, and things like that. So depending on what that is, it will be interesting to see what kind of investments they're making, because in short, going from 9, they're spending, around a little over a third of their cash that they're getting on these capital investments. So if that's growing the business, buying additional property to lay some more track, and then that's going to increase their value in the future, that would be a great thing to see. But the assets that we're seeing here from properties hasn't increased that much. So note 11, we can check that out. And where's our note here? Capital investments. It doesn't have a note to jump straight to, but let's have a look for that in a moment. Share repurchase program. Okay, so the company's spending its cash there. It's also paying a significant, about a third of its cash to a dividend, and debt issued, debt repaid. So it's interesting that last few of these businesses that I've reviewed just end up splitting their cash 3 different ways: investing, dividends, share repurchase, as opposed to focus at the end of the day is something that can provide a much higher benefit. And they've also got debt issued. So I've got some debt, I paid down some debt. So things like if the business just focused on share repurchases, didn't pay a dividend, and spent more of its time in investing activities, it'd potentially be able to outpace its competitors in terms of growing capacity before they'd reached into it. Now then all it comes back into, are those investments actually going to pay off at a rate that we would expect? So these guys in the business, I'd hope they know what they're doing. They've been doing it a while, but most of these businesses have super slow and steady growth. This isn't a business that hits the 100x multiple, so it's not worth my time to look into any further. The only opportunity that would come up is if this business was significantly below its value of the stock. So at times during, say, crises like this, or the global financial crisis where the stock's gone from 37, 36 down to low 20s, where it's effectively halved in value, they can be opportunities to be able to buy that stock, ride it on the climb back up, as long as you have an understanding of how to value that company, because you need to know when it's effectively lower risk to buy. You want to buy low, sell high is the old investing adage, but you need to know when to buy low and then when to buy high, because you could just be buying a business that's going to go to zero and go bankrupt. So being able to analyze these businesses is a very useful skill and definitely worth learning. I've enjoyed the journey as it is. If you like that, you can go and click the link in the description. It's got a whole bunch of free resources that will be able to help you on the journey as well. It's everything I wish I had when I first started. Now, if you are looking to get in and you've either invested in Union Pacific Group or Union Pacific Corp, or any other more interesting investments, feel free to drop a comment, let me know below. I'll be getting to those and reviewing them in future videos. And if you like that, then check out this next video, because the YouTube gods reckon you'll like it. Cheers.